Happy Wednesday. Welcome to today's take, where we do a not so random walk around the markets and look at the macro, the micro, and the numbers around commodities, and really how mining is the foundation of our future. That energy transition is happening. People are paying attention, and we look to give not only just the data and the information, but a perspective on it. Today, we're going to be focused a little bit more on silver. As we move forward, we've been loving the precious metal story for the last while as we've been coming onto these live rants, in part because we want to get the message out to as many people as possible without having a bias as far as product, like, hey, go buy this product or buy that, or look at this, look at that. We want people at the end of the day to be excited about perhaps a silver ETF, perhaps bullion, perhaps looking at the CME or Sprott ETFs of junior uranium or junior miners. That's our main bias and our goal. And I think it's important nowadays, especially in the age of mass misinformation, that someone just flat out says, here's my bias. Instead of having to read into it. I mean, sometimes it is that obvious in the news, but I think from a newsletter's perspective, I think it's important that people understand the narrative that's being addressed and put forward. And from my background, I was never a gold bug or a silver bug, or quite frankly, when I was at Merrill Lynch, had almost no interest in mining. And I went through the big internet.com when I was at Merrill Lynch, and we had some gold bugs and some mining guys in there, and I just didn't get it. But I was young. All you want to do is look at technology. And that market took off. That was before any of the big energy transition discussion. The culmination of so many world events that we're going to touch on a little bit today, specifically, I mean, war in the Middle East, the big stimulus package from China. You could look at the dock workers strike. I mean, there's so many things that are happening nowadays that make the case for gold and silver. And there's a reason why even the huge investment banks, your Goldman Sachs, your JP Morgans, they say anywhere from 2 to 10% of your portfolio should be in gold or precious metals. Silver is interesting because it's kind of like gold, but on steroids. That's a nice way to look at it when you see the fast movement when it starts to go. So a lot of people that will be looking at the silver price today. I mean, the last 5 days has been great. It's back up, touching that, getting close to that 32. If it breaks it, does it break that barrier? So obviously people will be looking and saying, is this too late? Have we hit the band? Will it drop down to 28 to 24 and bounce around this barrier for a while? Well, we're not traders. That's not our job. There are people that would be focused on those short-term trades. But what I can say is that the general consensus from most of the talking heads out there is that this is here to stay for a while. And I would have to agree. There's nothing in the socio-political economic sphere that urges safety, that there's a great plan, that we're all in this together. There's none of that. There's lots of uncertainty. And that uncertainty is reflected in the market. Whether or not you're looking at inflation, which we like to talk about a lot, there's so many different factors that are critical to looking at all these things together. And part of the issue is that if you're the mainstream news, gold's not that exciting. It's small. The mining sector is small. It's not a big market. And even though they're very well aware of critical metals, and we see a lot of news, it isn't the same as the billions and billions and billions handled out to a solar panel company or to a chip manufacturer. Those get all the news, and the numbers are so staggering. You can get lost on, $500 million deal in a junior mining sector. That's not going to move anything in CNBC, and that is part of the issue. Is that it's a very small market. To get an influx of capital is challenging, but that's also what makes it asymmetric. Because if you're like me, and you're like pretty much everyone on this side of the space that has put in a lot of time. And I mean, I've only put in 6 or 7 years into the mining sector. There's people for decades and decades that see this coming, this fruition, playing out first in precious metals and the actual commodity, rolling down through the stocks, and then eventually into high quality junior stocks, that this is happening now. Whether it's tomorrow or 3 months or 6 months, it's started. And perhaps I'm well, of course I'm biased, and maybe it's too much hopium. I don't know. I don't think so. I think that there's a final realization that the world isn't going to change overnight to being a big happy place. There's too many things set in motion, in the global scheme of things, to show that there's separation, that there's significant issues between the globalist kind of idea to maybe a bipolar. That sounds terrible that way, but a two world order, and whether that's BRICS or whether it's just China. I think most people see that is occurring. But we also have to put on our hat of critical thinking and realize that the reality of, yes, there's war. We've seen what's happening in the Middle East. And it's not our take to have an opinion on it. It's just to state that is moving forward at a rapid pace. That just leads to the entire notion of stability and a requirement for precious metals. Now we've got a special guest. I want to jump in here. We're going to play a little bit of video first before we have our guest join in. But let's get that loaded up, and we'll take a quick peek at something here.
My talk today is going to be the silver economy. Are you ready? So I'm going to do a little macro first, macroeconomics, and I'm going to run through these quite quickly. Global debt. This is a new milestone. Globally, debt has reached $315 trillion. Seems like it's setting a new record almost on a daily basis. What's maybe more important is the debt to GDP.
We have Peter Krauth. We're really excited to talk to him. We are at the Metals Investor Forum. This is one of our go-tos if you want to talk about silver, and this is the premise of this show. I wanted to highlight that. You can watch that on the Metals Investor Forum, so feel free to check out that channel. But also, you should go to his site as well here at the silverstockinvestor.com. And of course, the book, The Great Silver Bull. Peter Krauth, how are you doing?
Doing well, Andrew. Nice to be here with you. Sorry about the timing, but I'm here.
No problem. Well, it's great to have you. We're very excited to talk to you about a number of things. Obviously, that debt issue is significant. But let's just start out with something a little bit more fun and say, okay, silver has gone up. It can't go up anymore. Surely it's too late to buy in. I've missed the whole run. That's the end of silver's story. All right, I'll pay attention to you next time whenever you. What are your thoughts on that?
Yeah, I really disagree.
Good.
With that, otherwise I wouldn't have written a book called The Great Silver Bull. And only 2 years ago, and it really only started to move. Back in February, late February, it was $22, and then it ran to 32, and we're still near there. And if you look at some long-term charts, and especially inflation-adjusted pricing, we are a long way off from silver peaks. We're looking at probably as much as a 5-bagger just in the silver price from here. And I personally think we're looking at close to a 10-bagger ultimately from these prices. So it's not too late.
No, I love it. And you can see except we get a lot of people that are into mining and they know who you are. But when we're reaching out to someone who's brand new and they look at the chart, they think, oh, it's precious metals. This stuff doesn't move, or, I can see way back when it did its spike, but this chart looks great and I've missed it. You see that all the time. And then they hum and haw, I shouldn't do anything. And it just creeps on, keeps doing its thing.
Exactly. You're right. Silver is particular. Gold is one thing, and gold is the king of precious metals. There's no doubt about that. I'm the first one to admit it. But silver can be very rewarding. The first thing I will say, the sort of cautionary disclaimer is, if you're not prepared for two things, one is to be patient, and the second is for volatility, then this is not for you. Because silver is, will go long periods doing nothing, and then it explodes higher. It also corrects very quickly and violently sometimes. So these are things that investors have to consider, take into account. And I think that's the opportunity, is that because of its volatility, there is a lot of movement. And especially if it's gone for these long periods where it has not been exciting or active, these are the ideal times to be accumulating. But to be fair, people, I think, do not, if they don't have the patience, is because they don't really know and understand the market well enough. And in many ways, that was really one of the big motivations for me to write the book, because I felt that it was a way to give people a really good overview of what silver is about, its history, its role economically, historically, and more currently, and its importance in today's both industrial and investment markets, and to explain how to take advantage of the opportunity, and really ultimately how to sell it when it reaches a peak. Because like any and every every market that runs through a secular bull, it will eventually peak. I have all sorts of views about what one should do and what that will look like eventually, but you definitely want to participate in it. But you don't want to participate in it, and if you don't understand it well. So the book is, I think, the way to get to understand that market and how you'd want to get involved.
And of course, you get the book off of your website. Here, I'll bring it up right here again, just so people can see it here. There we go. This is where you can get the book, but also it's important to look at the newsletter, because, like you said, I made a joke saying, silver is kind of like gold, but on steroids. Like, when it moves, it will move.
That's right.
And it's one thing to talk about the opportunity in precious metals. It tends to not be volatile. It tends to, be kind of background noise. People don't pay attention, except for your big thesis, what's gone on in the last years. And if you're not someone who wants to pay attention, and you're not going to get any guidance, yeah, you could sleep through it, even if you did buy. So you want to be able to rely on someone like yourself, who's a specialist and expert in this market, in this metal, and how it acts. And that's what not only the book will do, but your newsletter, your guidance is to say, listen, when it moves, even on the sell down, people need to be aware, and they need to kind of be in touch with someone to kind of prep them for when that happens.
Yeah, I just want to mention, Andrew, what you've pulled up there is actually the website which is for my newsletter.
Yeah.
As for the book itself, the easiest way is, you can go to thegreatsilverbull.com. That's a page I have that talks about the book. But people can, the most simple and sort of direct way is to go to Amazon. It's available there.
Yeah.
And you'll find it, and that's how I've got it set up. So it's available print, Kindle, and audiobook. So, whatever.
We'll put a link down below, so you can just go click it, people, and go buy it. But it's a great read. I've read it. And it's important to have that level of understanding. And we're trying to reach new crowds as well, of people that would normally not look at silver. And we certainly have a bias towards a lot of the stocks, and I won't, reveal any of the stocks that you like. I can guess at some of them. But that's part of the reason why they have to reach out to you, is that, hey, here's the commodity. And eventually, and you can tell me if I'm wrong, money flows into some of the big producers. We've definitely seen some of them do very well in the past year. And part of that is under that kind of understanding of, say, the dock worker strike. That cost of inflation of people working on docks is a big issue. Never mind automation, but it's in the solar panels, and it's the shipping of product all over the place to get silver one place to refined and then put into solar panels, sent off to wherever else. That's a lot of work. It's a lot of effort. and that trickling down takes a bit of time. And I've heard a lot from a lot of different people in the space that it looks like this sector is starting to light up in the boom, not only in the commodities, partly because they have to react, but we're going to see money come into a lot of the mining companies themselves.
Yeah, absolutely. And you're right. It's the metal that moves first. If people are wondering why the stocks don't move, well, it's not a perfect relationship, but it's a good one. It's the metals first, and obviously higher metals prices drive higher stock prices because for the producers, that makes them more profitable, right? It's the same effort to get the same metal out of the ground, but when you turn around and sell it, you're getting more for each ounce that you're selling. So same effort equals higher profit. Then for the developers, you get into, it gets a little bit more complicated / sophisticated, but then you get these valuations for their projects, and higher price leads to a higher valuation for the project. And then for the explorers, it's similar in the sense that this metal is in the ground if they have found an economic deposit, and obviously a higher silver price translates into a higher, more valuable silver deposit. So it typically does work its way down, and it not only in terms of the level of advancement of the company from, say, producer all the way to explorer, but also in terms of investors. So you've got a small group of investors who are just rabid about commodities and understand the risks and are willing to get involved early in sort of these smaller cap exploration plays. But what happens is when the price of the metal starts to move, you get, other than these I guess more informed, sophisticated investors in this area, you get first what we call sort of the smart money. These are the larger investors that have a lot of means for research. They see the value, and this is going to be mostly for the large producers first, and that's why they start to move towards that sector, and then it trickles down. So those get more fairly valued. Then they look to the next level, which is the developers. Those gradually become more fairly valued. They push their prices up, and then ultimately they start to look at the juniors. So you see the progress of the funds flowing to these different sectors of the silver space, mostly in that order.
And this isn't being too outlandish, but some of the biggest names that we see in the space, I won't mention them, people will know who they are, but a lot of them made significant, this is the level of asymmetric gain I guess I'm getting to, had made such significant money in the 2000s that you could still fund some of these ventures at 2024 where you're saying, oh yeah, no, I'll put 500 grand into this one or $1 million into this one. Because when this market goes, it goes. And that's just on a cyclical nature by itself. My argument would be, okay, those cyclical natures, that has to happen, and maybe we're owed one. But on top of that, we have this culmination of so many other factors between the actual realization of an energy transition, not just the talk of maybe lithium's going to happen and maybe this will happen. That is happening. We have war. We have rising tensions across the world. We have a dock worker strike. We have this whole advancement of technology where maybe we don't need dock workers. Maybe it can be all automated, kind of like the auto workers strike. What does that look like? Here's some of the amazing things that happens because of metals in robotics and in AI and in energy. But there's the flip side of that. And this whole event is together, intermeshed, happening all at once, coupled along with global tensions where there's going to be like two kind of possibly sides to markets and to things, with a very firm understanding that the West needs direct pathways to critical metals, including silver, because it's an industrial use product. I would say that beyond just that cyclical nature, it's that culmination of all of these other events that everyone, even though if they're not cognizant of it, they know it's happening together. It makes this very compelling, to say the least.
Absolutely. I was presenting actually at the Metals Investor Forum in Vancouver just a couple of weeks ago. And one of the slides in my presentation is from a quote from a New York fund manager called Gehring and Rosenzweig. And so Leigh Gehring, at one point a while back, ran one of the largest commodities funds in the world and one of the most successful commodities funds in the world. And he's ultra bullish silver. I mean, I thought I was bullish. I've heard his target for silver at something like $500. So makes me look tame. But this is a smart guy, clearly very successful, very smart guy. And I came across a quote that he had put out on uranium. And so his quote on uranium, when I saw this quote, I thought, oh my goodness, it gave me shivers. I thought this is exactly how I feel about what's going on in silver. And I dare say, I don't want to, put any words in anyone's mouth, but maybe he's thinking that about silver today too. In any case, this is pretty recent. And so he was saying 5 years ago, we became uranium bulls. The market had quietly slipped into a structural deficit with reactor demand outstripping mine supply. Fuel buyers used so-called secondary supplies to fill the gap. So to give a little context, when I brought up this quote in my presentation, I had just finished in the prior slides explaining what I thought was going on in the silver market. And this goes back to March. So I started doing some of this research back in January and February. When I spoke at the Metals Investor Forum back in March, it was the first time that I brought up some of this research. And, I kept wondering and asking myself if there's, we're into at least a fourth year this year of structural deficit for silver. Just to give big numbers, according to the Silver Institute, there is about 1 billion ounces of silver that comes to market each year. This has been the case for the last several years, and they're expecting it to be flat to slightly down, in fact, despite strong demand over the next few years, that we're not going to see more silver come to market from the two sources, which are mining and recycling. Roughly about 85% of that 1 billion ounces comes from mining and about 15% comes from recycling. So supply is about 1 billion ounces a year and demand is at 1.2 billion ounces a year. So we're 20% above in demand versus supply. So if you look at the last 4 years, including this year, forecast deficit, we're looking at something like 740 million ounces of cumulative deficit in the last 4 years, which is 3/4 of a single year's supply. So this is really starting to add up fast and become very meaningful. And then I thought to myself, so this was back in January, February, the price of silver was still in the low 20s. It bottomed in February at 22. And I said, okay, what's going on? Where are these? Because there's, the demand for silver is, as I say, above supply, and it's growing as well. So I asked myself, where are these industrial users, mostly industrial users? So a lot of it's investment buying, but where are these industrial users getting their silver? So I started to poke around and I looked at the large, what I call secondary supplies. In fact, interestingly enough, just the same way Gehring referred to them, as secondary supplies for uranium in his case. But where were these were there secondary supplies of silver? And if so, how much, what was the size and what was going on with these supplies? So yes, there are large above ground secondary supplies of silver. There are no real estimates any reliable estimates that anybody has. I've heard anywhere from, maybe 2 billion to 5 billion ounces. But what is measurable is what we see in the largest inventories, which are the LBMA in London, Futures Exchange, the Shanghai, and then the COMEX. And if you look at what I was able to find charts for all of these going back about 10 years in each case. And each one of these exchanges, there's also the silver ETFs, which have hundreds of millions of ounces, probably over 1 billion ounces in total as well, globally. So if you look at these sort of four sources of secondary supplies, over the last 10 years, it was growing to ultimately flat until about sort of early 2020, 2021. And then all of a sudden, in early 2021, all of them, I mean, without fail, all of them start to see their supplies drop steadily and then more and more quickly. It's incredible. I mean, anywhere from about 40 to 70% sold down in these supplies. So including the ETF silver holdings, that had not happened. The best barometer is the SLV ETF out of the US, started back in 2006. And I looked at these charts, and even when the silver price tanked, which happened a couple of times since 2006, you either had the holdings of silver in the SLV ETF either move sideways or actually move up when the silver price came down. You never had a sustained period of silver inventories in the SLV ETF drop. Well, that changed. That changed also in 2001, just like it did in the inventories of the futures exchanges. In any case, to kind of sort of wrap this up, the inventories across the board in all these sources dropped anywhere from about 40 to 70%, and have continued to drop since then. So I put these two situations together. Industrial users are buying and investors are buying more and more silver. There is not more silver coming to market. That's flat. So, and you've got this deficit. So they're still getting their silver. The question was, where were they getting their silver?
Yes.
And I believe that mostly answers it. They are getting that silver from these stockpiles, these what I call secondary supplies of silver. So they were able to go to these futures markets to buy silver ETFs. And in both cases, in the futures market, you can have a long contract. You can wait for it to mature, a month or a few months, and then go to the exchange and say, I mean, the exchanges were not built for that, but you can still do it. You can say, I have this contract. It is now matured. I want delivery. You can hold certain silver ETFs that are backed by silver, go to the issuer and say, I have this many units in this silver ETF. I want to take delivery. And I believe that's what they've been doing. So they have been, and you can see it from the charts, how these inventories have drawn down. I believe they have been buying long futures contracts, buying silver ETFs, taking delivery, and drawing down on those inventories. Well, interesting. I know I've gone on for a while.
No, I love it. I love it. It's great. It's making me think about a lot of different things here.
Super. So one last sort of aspect to this is that someone, that I have contact with in the industry, and this happened a matter of weeks after I started talking about this, sends me a report from TD that does excellent commodities research, and came to essentially the same conclusion as I did, which was that not only is it likely that they've been able to draw down on these supplies. And so here's a key thing that I think really needs to be understood about what I just said, is that because they've been able to go to these secondary supplies, their demand, which, as I say, is beyond what is coming from mining and recycling, has not pushed the mine and recycling supply to produce more. They've been able to go to this stockpile and just draw down on this stockpile. And then, so they've been able to do that at prevailing prices, whatever those might have been. That did not put pressure on squeezing the supply and pushing the price of silver up. But I think that, these are all guesses, but educated guesses. And I think that we've got 12 to 18 months maybe of continuously drawing down on these secondary supplies before that game is over, before those inventories run out, and then someone's going to go to the market, had been able to do for a year and a half, and say, oh, here's my long contract, or here are my silver, here's my, my holdings in the silver ETF. I want to take delivery of the physical silver. And they'll say, hey, I'm sorry, there is no more silver left.
Yeah, oops.
Force majeure, exactly. We'll pay you, but we'll pay you out in cash.
Yes.
And that'll be that. And they'll have that way out. But that's not what that consumer will want. And that's going to lead to a new silver squeeze. And that could really, just sort of light a fire under the silver price. So that's a really long-winded answer, but hopefully it explains, how I see things. And by the way, TD, as I said, had essentially the same conclusion. They saw these silver inventories coming down, and they thought, this was back in April, they thought 12 to 24 months of this going on, and then that game would be over.
Let me ask you this, because it weaves all this together. I'm going to talk about, say, BRICS. There's rumbles and rumors that because of the lack of renewal of the petrodollar, the Chinese have been able to go to the oil markets outside of any reporting and their own way to get oil. So we're not seeing that reflected in the price at all because they've got their own market now. Do you think, they've got the Shanghai Gold Exchange. Do you think it's possible as well, the Chinese saying, we make all the solar panels here, so can we make our own mirror exchange where we can get silver? Once again, we don't have to report it to you guys. We have no interest. We're taking further steps to separate, and you're then not going to get the robust view of the data that you think you have. You think you've got it controlled. You've got all these markets lined up, and we have to use you. But if we are able to create them, there's that kind of hat. So kind of maybe give me a comment. And then also going directly to producers. Are people, do you think, going, I'm SoftBank, or I'm XYZ, I'm Sumitomo. I say, listen, whatever silver producer, I'd like to buy this much. I'm willing to give you a good hefty premium if you send it to me my way. Do you think that's even happening? So there's two big questions that.
Yeah, absolutely. So, I'm quite certain that they are accessing silver in ways that are not available to us to see publicly. Yeah. And it's certainly in, this is not, the West has plenty of its own faults, but this is a very different kind of system. Whereas you say, a lot of these things are not and do not have to be reported or revealed. And so I'm quite certain that, especially with some of the maybe private mining companies, they can go to them and access those sources. I even heard recently that North Korea may have plenty of its own silver mining going on. And what are the odds that we're going to hear about silver, going from there to China, right? Yeah. Probably less than zero. So that's just one example. But yes, I certainly believe that, they absolutely desperately need silver in China to produce 80% of the world's silver panels. So they're intent on finding ways to get silver. And obviously, they would much rather get that silver, at existing or even lower prices than, doing it in such a way that reveals to the market how badly they need it, and which would obviously help push the silver price up and force them to buy it at higher prices, not in their interest. The second question that you asked about is actually something that was which I'm sure is the case, because it was said to me by a larger silver miner, which operates a pure silver mine, one of the rarest things these days, in fact. And so this is a mining CEO who told me, and this was right actually after my presentation in March, who said, we sell about half our production to China. We sell the other half to the West. And our Chinese buyers are coming to us and they're saying, we're actually prepared to pay you a couple of dollars above spot. We're willing to pay you a couple of weeks in advance of delivery. We really, really, really want that silver. So it is going on. What you mentioned is happening. It's I'm not going to say who said it or any of
No,
that
no,
stuff.
no.
I
Yeah.
have every confidence in terms of, you know, uh, the authenticity and the level of involvement in the market, for this company and these people, that I'm quite certain that is absolutely happening.
To me, it's not going too far out there in any way, shape, or form. We in the West have really lagged behind this notion of critical metals. China has been dominant for a while. People can be angry about the amount of coal they use, but they are doing renewables and nuclear at a pace that is incredible. So I like the idea of the narrative too, that BRICS might be some sort of commodity-backed separate system. To me, I love that idea. I would much prefer that than you hear. I'll put on the other kind of conspiracy hat that the U.S. might have some sort of Fed coin along with BlackRock. They are working on something.
Right.
They already manage some of the Fed's money. That would be crypto based. And like, well, if it's based on some sort of fiat crypto / some sort of interesting, I don't know. Once again, that's my bias. That's my narrative. I like commodities. I see if you really want some sort of barometer against energy transition, doing any of this, it has to be commodity based. Even if it isn't, it still has to go back to oil and gas. That's still a commodity. So I like having something where there's a reflection of a real end use that it goes towards energy. And really, energy is the wealth of a country. There isn't a country that doesn't have strong, easy access, good, cheap energy that is robust and wealthy. You have to have that.
Exactly. You're right. I mean, if you don't have it yourself, you have to have reliable access to it. And so definitely, I mean, that I've seen, research in the past that in some ways the level of energy consumption on a per capita basis is quite correlated to standard of living in a given country. So we've often thought, the more energy we produce, the more we should try to cut back. But it's been shown that if you can reliably, consistently produce more energy, the market will find ways to consume it. And that's progress, frankly.
Yeah. And I don't want to spin off on this, but I mean, you mentioned the uranium thing. There's so much news now again regarding like Microsoft and 3 Mile Island with Constellation Energy. Every single one of these billionaires has some sort of deal they're doing. Either it's fusion or it's uranium recycling or recycling waste. They're all involved, and I don't want to get into that conversation other than that's just another side of the coin. I mean, it's still mining. You still have to mine for the uranium, not the silver. That's all start of this entire conversation about an energy transition and where are you getting this material? And it seems that what makes this cycle that's happening, I would say it's happening, is the eventuality of people realizing we have to get money into a very tiny market. And it's tiny compared to, say, like NVIDIA or any of the Magnificent Seven. I mean, you see billions for this chip manufacturer, 20 billion for that one, 100 billion going to OpenAI for, 100 billion. I mean, the numbers are staggering. If you tried to squeeze in a fraction of that into mining, I'll let you tell. What would that look like to someone if they own Wheaton Precious Metals or they own, Barrick, even, never mind some sort of junior that has a good project, maybe that's aligned with a Franco-Nevada or a Ashanti Gold? What does that look like?
So I'm not even going to explain it myself. I'm going to quote someone who said it, I think, best because it gives for, it provides for great visual. So some of your listeners may know of a guy by the name Doug Casey from Casey Research. He is the original speculator, resource speculator. And he said, and this is about silver stocks in particular, but not just, it really applies to the commodity space in general, I think, is that when the generalist investor really starts to understand and flood into the market, it's like trying to get the contents of Hoover Dam to go through a garden hose. There is just not enough, of these companies to absorb that capital, and their share prices have one way to go. They just absolutely explode higher. I mean, you can have not just 10 baggers, you can have 100 baggers or 1,000 baggers. It just, I'm not making this up.
No,
This has been the case. It has been the case. We have not seen, the last sort of cycle was pretty good from 2000 to say 2011, 2012.
yeah, a little bump. Yep.
Very good cycle. But some companies did see that. I don't think we've had that really sort of crazy speculative mania that has happened. We've seen it happen in the 70s. I think that's going to happen in what I consider to be the second half of this secular bull market, which, would have started depending. You can pick any date in the last few years, but I really think it has started to pick up in the last sort of 3, 4, 5 years again. And the best really lies ahead as far as I'm concerned. So that's the best way to describe what that can look like.
Well, it runs full circle to that initial video of your presentation at the Metals Investor Forum, where you're talking about the level of debt. And if you thought the financial crisis of 2008 was, oh boy, that was scary, this, like, the level of debt dwarfs that. I mean, that's what's so staggering, is that it's so large, and it is mentioned in the news, but not the respect that it deserves. And that had a big run back then. People looked at the metals and miners, but once again, that was also just the very whisper of some sort of energy transition. That's really, I think it was like we had a bit of a uranium thing, but then we had Fukushima. We had people whispering about this lithium thing. What's this all about? And we saw that kind of explode. We're now at that stage where the common person knows there's an energy transition. They don't know exactly what that means. And then the ones that do, the politicians will not understand, well, that means mining. They're having to get their PR hats wrapped around their head to go, oh, we've really bashed miners for a long time, and we need this stuff. We can't just sneak off to foreign countries to do it without being caught in this age of social media. So we can't do that anymore. We're going to have to reimagine our narrative. And we're seeing that even here in BC with the NDP coming out, changing their narrative about mining. And they're like, oh no, we're very pro mining. We've got critical metals, we're this and that. That you wouldn't hear that before. And I would liken that to, like you said, we have very similar or mirrored events in many ways to the 70s. And if you're young, and that's who I'm usually trying to reach out to, look to some of the, I put myself out here, older people that have seen these markets. They've worked them. They've been in them. There's Rick Rule unit. There's all sorts of people that have been around for decades. They've seen this. They know what it looks like. And there's a way for you to participate in it, either directly by like reaching out to your newsletter to see what's like individual stocks you like, but also listen, just go buy a silver ETF or just go get involved somehow. Take that first step.
I completely agree. And I think, people ask me that about silver, and I tell them, if you don't own any physical silver, just go out and buy a coin or a couple of coins. They're not cheap in the sense that, you're paying a hefty premium, especially these days, over the price of silver. But we're still talking about, say, $40, $50, or even if it's $60 or something Canadian, that, most people can manage $60 to get that silver coin in your hand, and it'll feel special. Believe me, just the weight of it, a brand new a Canadian silver maple. Look at how these things are produced. It's really quite magical almost, and that's the first step, I think. Hold some physical silver, a coin or a couple of coins. You have a gift to make for someone. That's something someone will hold on to forever, and then that gets you interested. And from there, the next step is you don't have to take any kind of huge risks, and you can allocate small amounts at the time. Trust me, there's nothing like putting a few bucks in an ETF or in a stock to start following that thing like a hawk. I mean, I know that's how I act.
Yeah.
If it's $500 or whatever it may be, $200, these days trading fees are so small that, you could put $200 into something, and it could be sort of a first tranche of some stock you like, and watch it. watch it and see if it goes the way that you were hoping. Maybe they're coming out with some news soon. If it reacts and reacts well, it's just fun, right? But it gets you comfortable with it. And as I say, you don't need to take the big risks. You can go with one of these ETFs that's instantly diversified. It's like buying a fund of silver companies, for example, and then you gradually get comfortable with that, and then you can go to, and you don't have to go all the way to the highest risk. That's not for everyone. But in the letter, I do cover everything from the silver ETFs all the way to the juniors. And so I feel, and even I talk regularly about physical silver as well, and how and where to buy it. And, these are things that I think everyone should have, even if it's a small allocation, but they should have some allocation to silver. You talked about a little earlier some of these bigger companies. I don't mind mentioning a couple of them. I think one of the largest public silver producers in the world is Pan American Silver, and not even a producer, but I think it's the largest royalty company in the world, metals royalty company, Wheaton Precious Metals. They actually invented what we call the streaming model, which is like a royalty. I'm not going to get into the details of that, but these two companies at some point in the 2000s were up about 15 or 16 times.
Yes.
And so these are two of the largest capitalization, probably lowest risk companies you could buy in the silver space. And they had those kinds of returns in a matter of a few years. It didn't take from 2000 to 2011. In one case, I can't remember exactly, but in one case, it was a matter of maybe a year and a half, 2 years. And in the other case, it was maybe more like 3 or 4 years. But you had those kinds of returns in the lowest risk stocks in this space. So imagine what will happen when you're in the right kind of environment and you're looking at what the most highly leveraged small cap, or in some case micro cap or nano cap silver explorers will do. And that's why you get these, 10 times, 100 times returns. It could be pretty phenomenal, but you need to spread your money across a bunch of these names, especially in the higher risk category, because more than likely, if you have 10, 1 or 2 will go to zero. So you don't want to just have it all in that one name. But you could have another 2 or 3 that give you a 10 or 50 bagger, and that will more than make up for the ones that go to zero. So it's all a matter of comfort. You have to know yourself and how you're comfortable allocating to these different categories of risk.
Absolutely. It's that risk threshold is so credible. Not only is the knowing your risk to return ratio, but it's also the bet size is important. And you mentioned it is just ease into things, because especially when you have something like this, where if you want to be an active part in this energy transition, you don't have to go buy a solar panel company. You don't have to go buy a Tesla. We have to get people comfortable with the idea that the critical metals, all those ingredients to make all of the products, they should come from places that have great regulations, that we do well things economically well, socially well, in partnerships with people, and regulated well with the environment. That matters. So for young people, you're not only investing in something where you may have the possibility of making asymmetric gains, you're putting it towards solving the problems that are most important to you. A, you're creating a future. There's a fiscal reason, and B, you're solving an environmental reason. And I think those two things, by taking your first step and putting into something, you're then part of it now. It isn't just an idea and just mulling it over. Is that no. You've done more, I would say, than go march in the street about climate change. We all know what the problems are in the world. We know what they are. There's not enough people talking about what the actual solutions are. And this is a way that you could be, especially in Canada, North America, we're a resource-rich country. We should be actively encourage people that especially the exploration side and even parts of the producing side, they're speculative and they're cyclical. But it's no problem in looking at, say, even the exploration side as being just like biotech R&D. I mean, hundreds of billions of dollars gets pumped in through there and it disappears. But people don't complain about it. They complain about the junior miners. A, yes, there's lifestyle companies, and B, because they don't see the amount of success and they mostly just hear it's negative. And I think we're going to see a big turnaround from governments on up of this recognition that we need this to make this change, and we need a lot of it. But we need to feel that we trust those you're facilitating that critical metal.
Agreed. I mean, a couple of great points. The younger generation needs to start to, look at this, understand it, and they can not only participate, but by participating, they're actually contributing. Like you say, I think these are crucial steps, and I'm encouraged. Actually, I see more and more. I go to these conferences. I see more and more young people, very, very bright minds, asking fantastic questions, and I give them a lot of credit. I think that the wise ones are the ones who have an open mind, starting to see this, and are starting to get involved early. And speaking of getting involved early, some fund managers, I think, are recognizing the value. Here's an interesting statistic. In fact, I think I had it in my presentation from just this past this week or two ago at the Metals Investor Forum. So actually, I did. So it's a chart that was produced by good friend and analyst Tavi Costa, who is with Crescat Capital.
Yes,
he's on Twitter and LinkedIn. He does some fantastic work. I recommend to your followers to look him up.
definitely.
Tavi Costa. Fantastic work. And so what he did was so you've got the S&P index, which is the broad index of stocks in the US. And what he did was he said, okay, what if the gold and silver producers that are listed on the S&P, listed in New York, were their own category, like a sub-index of the S&P, what would they look like in terms of their profitability, their cash flows? Well, they actually outpaced every single other sector in the S&P. Cash flow margins for gold and silver producers listed on the S&P have 40% cash flow margin. They're doing better than any other single sector profitability-wise that you could find. They're not a sub-index, but he went through the exercise and said, what if they were, and grouped them together? That tells me that, when markets turn, the broader markets, and again, you're going to have the smart money, the larger institutional investors recognizing this first, because one, they're more sophisticated, two, they have the tools, the research, etc. But when a lot of these sort of Magnificent Seven and all these things sort of start to turn, they will start to, they have to have numbers that perform. This is, every month and every quarter, they're going to quickly look for deep value.
Yeah.
And you cannot find better deep value and profitability than you can in this sector right now. And I've already heard, from others that are in this sector, where they've heard from a generalist fund manager that have come to them and said, I've loaded up on this sector because, and I'm talking large caps, not talking to juniors.
Yeah.
I've already loaded up on this sector because you can't find better value. Like, the upside is tremendous, and the risk to downside in sort of these the tech companies and all and so on is so much higher, the downside risk versus the upside risk in this sector. So many of them have started to rotate. I think that's a really wise move.
Well, yeah, I mean, I like growth, and it's great to talk about AI and growth, but at the end of the day, especially in times that are challenging, we want to see some cash flow. So If you want to talk about cash flow, I watched a great video on Kitco. It was Meta Royalty. It was Brett Heath was on, and he was just kind of talking about, say, take Barrick, and they're in, I think all in is 1447 for gold. Gold's now at 2650, relatively speaking, say. Now, maybe we didn't see as much growth in those producers right off the bat, and believe me, they did well. We all know that. But perhaps because inflation skyrocketed so high, the cost of goods, the cost of employment, everyone wants a raise. There's all this spiked up. That happened a year ago, 6 months ago. That's settled down now. I think everyone agrees that, yes, we had the inflation. It's still progressing. It's just slowed down. And that means that's actually great because, those producers, the next quarter looking forward, one would think they could be really sitting on some surprises for people. So for the short term, if you're looking at someone who is deep value, that is looking at silver at $31, at gold at 2,600, and knowing, wow, you're all in, like that's $1,000 per gold. And if you're able to leverage up and maybe push out a bit more, what's that look like? That's a lot of cash flow. That's a lot of money very quickly. And people are going to want to look at that. Like you said, like fund managers, they're getting a little bit nervous about this whole, like, show me some revenue from AI other than NVIDIA. Like, I need to see what are the products that are being sold, how much is being sold, what's the revenue generated. If it's not high enough, then I want to cover some of that by looking at companies with huge cash flow. And right now, that's the setup is for miners. And certainly the precious metals are going to lead the way.
Agreed. I mean, if we think that 40% cash flow margins right now, and that's looking back, right? That they're the most profitable sector if they were a subsector of the S&P. Imagine going forward when we start to get quarterly numbers for revenues, profits, etc. for these mining companies, when we've had gold and silver gold at all-time highs and silver at multi-year highs. I think like a 13-year high now in silver at $32. So imagine what their bottom lines are going to look like when the next quarter starts to get reported. So I think those margins are just going to keep growing. And like you said, so that's another topic for another day. But we've had this big wave of inflation, and I think that it probably has and will, has calmed down and will stay calm for a while. I don't think that will last, but nonetheless, that I think will also help these margins because, as costs have settled, oil's a big one. Oil has come down fair bit in the last couple of years. These margins are going to stay robust, and they're probably going to grow over the next several quarters. So I think we're going to get a lot more attention coming towards this space.
Fantastic. Well, let's jump off for now. I appreciate you spending the full hour with us. I'm going to leave it with a hook here for people because and that you're going to have to reach out to you. So you're going to have to go to Peter's website. We'll also provide the links, and you can reach out to him. Maybe he'll tell you, maybe he won't. But some of the big news that was rummaging around the Metals Investor Forum was, Frank Juster is looking for a pure silver play. What is it? There's some news out there about it too. Maybe you know already, maybe you don't. But if you want to know, maybe Peter will tell you. I don't know. I can't make any promises, but you're going to have to reach out to him directly. So you're going to reach out to his letter, send him an email, try him a DM on Instagram or LinkedIn. And that'll be my plug to listen. You're going to have to put a little bit of work in. You're going to have to reach out to Peter and ask him.
Yeah, that sounds good. I mean, I'll be happy to reply. Yes, there is something exciting in the works. It's something that I'm really pumped about. I think that they have a tremendous asset on their hands, and so reach out. I'll provide some details for sure.
Perfect. And we've also at the Market Mindset, we've got our Substack going. I'll have our little daily rants like this, but it's going to be in writing, and we'll have that there. It's for free. Just go take a peek. Just make commentary and comments on the markets, but how they relate to precious metals and this energy transition. It's happening, and I think the more people get familiar and comfortable with it, the better off they're going to be. It's a big time of change, and it can be overwhelming. And that's why we have to make sure our foundation is strong. We can't build upon a weak foundation. And if we have that strong foundation of critical metals, which we have in Canada, lots of smart people to drive this home, we could really see a very, very positive future. And that's the message right now, is that there's a big, wonderful future ahead if we could just get our heads wrapped around the solutions rather than constantly just talking about the problems. So thanks, Peter. Really appreciate all your insights. And that's just a fraction of what you're going to get in the book here. I'll pull this over here. That you're going to get in the book. Go buy it on Amazon. We'll have the link, but reach out to Peter directly. That's the best way for him to give you any of the knowledge and insights directly around silver. Thanks, everyone. We look forward to talking to you on Friday.